So it's Christmas Eve and the crypto markets are still hanging on the edge of a cliff. And you're probably doing one of the three following things. You're either holding on for dear life, that's hodling, catching some falling knives, or you're capitulating at the lows. As it's a Christmas season and we're going to be having a break probably for a couple of days with the traditional markets being closed, let's go into these holidays with a bit of reassurance of where we are, how crypto stands fundamentally. We're going to look at some technicals as well, but just looking at an overall health of the market and where we are might give you some reassurance. So if that sounds good to you, come and join us for this week's show.
Yes.
Container. It's happening.
E-sold. Pumpy.
Welcome back to Prodigal Son Crypto with myself, Chris. Now, don't let yourself be a Wojak, okay? One of those guys, thinking that you're going to sell the bottom, you're going to buy back lower, and then you get caught with your pants down. Don't let that be you, okay? Because those big green candles can come out of nowhere. Obviously, it's not going to go to that extent, but what I'm trying to say is you do not know that this cycle is over. Nobody knows that this cycle is over. There is actually more case to say that the cycle will continue. I can't say to you whether it's going to continue in the next month or so, or whether it's going to be further along than that. But I do not believe we're going into a deep, dark bear market like many people are telling you online. If we look at Bitcoin right now here on the monthly, okay, we can see that it's had a few months down here from the all-time high, okay. It's still holding this cup and handle pattern, retested it for a second time, holding the 21-month EMA, okay? And then if we take it down onto the weekly, we can see that it's holding this 100-week EMA as well. Now, I'm not going to get bearish at all until unless we break this 81,000, this line, which was the neckline of the pattern, okay? So currently sitting around 81,000, okay? At the moment, we're trying to test, trying to break up. We've been trying to break up, but failing. Okay, but again, we're not breaking the lows. We are effectively just stuck in a range right now, and it could go one way or the other. I don't have a crystal ball. I can't predict the future. Okay, but there's other factors that tell me that not to worry. Okay, not to care. Okay, if we get lower, maybe I'll get to buy some cheaper Bitcoin again, and maybe I might get to buy some altcoins at lower prices as well. Okay, I do not feel that this is a point where you can say, this is definitely a bear market. Maybe it did, reach a local top in Q4 of a post-halving year, and it did break the 50-week moving average. That's the type of thing that a lot of people are looking at. But at the same time, when I look at this, and I look at the RSI as well, how low down this RSI is here, okay, reaching this level around 35, okay. The only times when it's gone that low previously was bear market lows here back in 22, okay, here, okay, that was in, March 2020, and also the bear market low of 2018, okay, and you can go back further, also in 2015. This is the most oversold on the 14-day RSI on the weekly that we've seen for a while, okay, so we could be expecting at least a bounce in the near term at some point. Okay, now fair play, it could just drop, and we could see this come down to these low levels that we've seen in previous bear markets, where it gets down to that, down to this 29.30 line. Okay, and that's entirely possible. But at the same time, it is still higher lows. It's higher lows. Okay, and it's been a trend of higher highs, and who's to say the next high is not a high? There's no, you can't say. And when I take it down to the daily, okay, you can see that the def cross, calling that low is still in play, just like it was back in April 25, and just like it was in August of 24, and just like it was in September 23. Def crosses tend to call lows, and it has done for the last few times. So, let's hope that was the low. We don't know really. But another thing I'd add to a bit of confidence, and if you've seen a lot of my videos, you'd have seen me talk about this before. Okay, we was in a Mercury retrograde. We haven't had a trend direction since the last Mercury retrograde. The last trend before that Mercury retrograde was down. The time before that was up. The time before that was down. The time before that was up. The time before that was down. The time before that was up. Okay, and the time before that one was up as well. Okay, maybe it saw some consolidation and some downturn during it. And if we are in a bull market, I'd say the next trend direction from here is up. Okay, because it was down before, up before, down before. See that? Okay, and that tends to happen in a lot of Mercury retrogrades. In Mercury retrogrades, you tend to get a slowdown. It can consolidate sideways around those periods, if you can see. But during and in between Mercury retrogrades, we see a trend direction. And usually that's when we see the biggest pushes. You can't deny that the biggest pushes, whether it's downwards or up, are in between those periods, okay? And you can see that going all the way back through history. I recommend you check this out. This is Mercury retrograde periods indicator on TradingView, and you can go and check that out for yourself. Taking this down to the 12-hour here, okay, just so you can see a little bit more detail on the price action, okay? Because some people are calling this a Wyckoff accumulation pattern, okay? Because as I mentioned recently, when we was watching the distribution pattern that led us into this fall, okay, I always say with Wyckoff patterns, it doesn't necessarily mean that that's going to be a macro trend, okay? Because you can get accumulation, distribution, reaccumulation, redistribution. Okay, now some people are saying this is a accumulation pattern. It could be redistribution for all we know. Okay, but if you look at this, okay, you've got this selling climax. Okay, you've got this automatic rally. Okay, and then you've got the rest of the pattern forming. And if I show you what Marty Party is saying, Marty Party here is saying this is phase B. Okay, and we should be getting a climb up into January. Okay. And then we'll go into phase C where we would get a spring, okay? Then we would get, and this would be by sort of early January, okay? And then we would start to see last point of support, SOS, okay? And we could see the rally continue for the rest of the bull market. If it is a reaccumulation pattern, just an interesting one to watch. And whether you think it's an accumulation pattern or a distribution pattern might be leaning towards your bias of whether you believe the cycle is over or not. Okay, and now here's Lyn Alden talking on Paul Barron about why she thinks the 4-year cycle is dead.
Are you in the camp of 4-year cycle still on cue, no real change in how these cycles have gone in the past, or do you think that has shifted some?
My base case is the 4-year cycle is no longer really relevant. It arguably hasn't been relevant for the past cycle either. Early on, whenever the supply halving happened, that was a very big change to Bitcoin's kind of new supply coming out. Whereas now, the annual supply inflation rate is well under 1%. It's a lower supply growth than gold as on a percentage basis. And so I don't really view that as like the main driver anymore. I think there's potentially some selling around the psychology of the 4-year cycle. But I think at this point, the much bigger factors are number one, liquidity and kind of macro effects, and two, the rate of selling of long-term existing holders, kind of OG selling pressure that has been on the other side of the institutions and the MicroStrategies and the ETFs gobbling it up. I think those are the two really big variables. They affect a lot more than the changing in the kind of per block supply rate.
As Lyn says there, it's all about liquidity and the macro cycle, the business cycle, effectively, as many people are telling us at the moment. Okay, it's not about the Bitcoin halving. So if it's not about the Bitcoin halving, then it's not about the Bitcoin 4-year cycle. It never was. it was always about the business cycle. Business cycle was always the 4-year cycle because it always run with the election cycle. But ever since the pandemic, they extended the debt, and now it's extended the cycle out. And it's quite clear in the ISM chart that we've been showing over and over again on this channel. Now, let's jump into some news stories that are big this week. Okay, so some breaking news for you, okay? Just in, President Trump expected to name the new Fed chair to replace Jerome Powell by the first week of January, okay? So that's going to be big news. We're going to know what sort of narrative we're going to be following. You know, obviously Trump's going to have someone in that's going to sort of obviously go in the direction that he wants to go in. Obviously, there's 12 Fed members, so you can't always bank it all on the Fed chair, you know, but he's going to have a lot of influence. Okay. Also, Trump media, so it's not Donald Trump, okay, but it's his company, okay, has bought 451 Bitcoin worth over $40 million. Okay. They know something. He kind of knows what's going to go on with the markets over the coming year or so. Okay. I'm not saying it's Trump. I'm saying it's his company, obviously. Yeah. And so they know what's going to go on. Okay. They wouldn't be doing that if they thought it was going to go down, another 50-40%, whatever it is, into a bear market for the next year. They'd wait, wouldn't they? And also Grayscale. Grayscale's research team is rejecting the idea that Bitcoin is on the verge of a deep and prolonged bear market, arguing instead that the 4-year cycle is dead and that BTC can see new all-time highs in 2026. And it's not only them. Other institutional companies, obviously, I know these are crypto institutional companies, okay, but they tend to sort of have a good insight to what's going on, okay, and they're putting their necks out here. They're showing how bullish they are, okay? Bitwise predicts BTC will break the 4-year cycle and reach new all-time highs in 2026, with ETH and Sol also hitting all-time highs. If the Clarity Act passes, okay, so they're saying it depends on the Clarity Act passing. I believe the Clarity Act, which has been pushed out to early next year, by the way, I believe it will pass. And I believe that we see some good price action before then as well in the lead up to it. And also, YouTube is exploring creator payouts using PayPal's PYUSD stablecoin, as per Fortune. Okay, so that's mega bullish there. YouTube, one of the biggest social media platforms, PayPal as a stablecoin to pay creators. That's crazy. That will open the doors for more as well. Okay, and many people think it's game over for MicroStrategy's stock. Okay, MSTR. Well, is it? Because Vanguard now holds over 3.2 billion worth of MSTR. So they know something, one of the biggest financial institutions in the world. And it's not just them. National Bank of Canada discloses buying $270 million worth of MSTR. And Amazon Web Service customers can now settle their cloud computing bills using BNB through Better Payment Network, an enterprise payment infrastructure built on BNB. So this is all great fundamental news that we're seeing here, okay? And we've seen nothing but great fundamental news for the past year. It's not been priced in. All of the fundamentals are not priced in with crypto. Most of crypto hasn't even broken all-time highs. Only a select few with certain narratives. There's not been a tide that rises all ships, okay? And that will come. That ISM is that wave pattern tide that you're waiting for and that I'm waiting for, okay? And I believe it's going to come. We can't put a time on it, but just know that it's coming. And do you want to be selling your bags now at the thought of missing that? I wouldn't. But that's not financial advice. I don't give financial advice on this channel. And if you like what you're seeing so far, don't forget to click like and subscribe and follow me for more content like this. But we've got to keep going because we've got more to get through. Binance weighing relaunch of Binance US. Don't forget, Binance was banned from the US under the evil regime of Gary Gensler and when he was in control at the SEC. Well, now things have changed. There's more clarity on crypto in the US. There's better regulation under Paul Atkins. And now, Binance are talking about relaunching in the US. I believe it's going to happen. Undoubtedly, that will happen. Okay, as we saw, CZ got pardoned by Trump Okay, Trump said he didn't even know who he was, but he was well advised by a lot of his crypto advisors. Okay, and as we've seen the ever-growing popularity of Poly Market this year, okay, Coinbase wants a piece of the action. They're partnering with Kalshi, okay, which is another prediction market, to launch a Coinbase prediction market in partnership with them. So there's going to be a lot going on with that as well. That's probably going to be on Base, on ETH, and we'll see how they build that. And check this out, right? The acting CFTC chair, that's the Commodities and Futures Trading Commission, the chair, Caroline Pham, to join crypto payments firm MoonPay. So she's leaving her job at the CFTC and she's going to work for a crypto firm. And what's better, watch this. The new chair, okay, is going to be this Michael Saylor, okay. Crypto and AI czar David Sachs calls CFTC chair Michael Saylor and SEC chair Paul Atkins a dream team set to deliver clear regulatory guidelines for digital assets. And here's David Sachs here, okay. Extraordinarily excited to have the leadership of Michael Saylor as chair of the CFTC at this critical juncture for digital assets, along with SEC chair Paul Atkins. President Trump has created a dream team to define clear regulatory guidelines for the 21st century. You can't make this up how bullish everything is in the US for crypto. They're literally setting up a whole team behind, at the SEC, the CFTC, Treasury Secretary is bullish on it, President's bullish on it, okay, and we haven't seen a proper bull run yet, and we haven't seen the business cycle play out in its full yet. We're in the waiting room, I'm telling you, we are in the waiting room, and it just gets better, okay? I'm smiling because I know what's coming eventually, okay? Got people being all bearish, saying, we're going into a deep, dark bear market. What with all this, okay? US regulators give Ripple, Circle, and other crypto firms preliminary approval to launch national trust banks. Crypto companies will be setting up their own bank-like services. Need I say more? But I will say more because there's plenty more to say. And Treasury Secretary Scott Bessent is here right now. Listen to what he's got to say.
We will take a close look at regulatory impediments to blockchain, stablecoins, and new payment systems. And we will consider reforms to unleash the awesome power of the American capital markets. Americans deserve a financial services industry that works for all Americans, including and especially Main Street.
Yeah, we've got a crypto government in the US, okay? And you know what it's like? The rest of the world see the US do something and they're going to follow on suit, They're not going to want to miss out on what the US are doing, okay? And it might all seem like, they keep saying these sorts of things, but, price isn't doing anything. It's all a load of, whatever. But you just got to look at a couple of charts like these, okay? Like I say, the ISM, okay, we've been below 50 for the longest time ever, okay? And, we've got the copper gold chart here. If you watch my recent video and you'll see me talking about copper gold. The last two videos I covered it actually really well, okay? But I'm just going to briefly show it here, okay? Look, the peaks and troughs are pretty much the same, okay? And every time copper bottoms out against gold, the ISM tends to start making its move up. And look at copper gold. It's been going down like that, okay? It's going to bottom out at some point. So's this thing. And then it's off to the races, okay? And I've got to give so much credit to Raoul Pal for, putting me onto the business cycle and the ISM. I've learned a lot from him. And here he is talking recently with his speech at Solana Breakpoint.
Just to show the importance of the business cycle and why ISM matters, it matters for every asset class. Everything on a year-on-year basis is the business cycle. People don't really understand this stuff. Once you understand this, it makes it much easier to understand how markets move when they move what they do. It's even easier when you know that we've got a predictable business cycle based on debt maturity. So if you've got that, you know what drives assets. Some lead, some lag. So crypto and technology lead. They actually follow liquidity. Other things like small caps and cyclical stocks, well, they fit with this. So here's the Russell 2000, which is essentially small caps. If we go forwards to crude oil, if we go through to industrial metals, the same. Everything, literally everything in the entire investing world is driven by this cycle. Even things like the ETH Bitcoin cross. So think of this as alts. Alts are driven by the business cycle. So with the business cycle currently low, we haven't had alt season. And everyone's like, I can't believe they've robbed us of alt season. It's never going to happen. There's too many tokens. We can't have nice things and all of that bullshit we hear all day. It's not. It's just the economy's stupid, because what happens is when earnings go up, when the business cycle is strong, you have more earnings and you invest those earnings further out the risk curve. It's just really basic stuff. It happens for exactly the same as small caps, exactly the same with junk bonds, credit. They all operate in exactly the same way, and the business cycle has been subdued. Listen to Scott Bessent. He's telling you all day, as is Trump, is we're going to have a banner year next year. Why? Because they're going to jam the market with liquidity, and they're going to jam fiscal stimulus through as well. Yeah, if you think about it, the US is a service-based economy. They're going to get rid of tax on tips. That's a huge boost to people. There's like $1.5 trillion that will flow into the banking system just from that stuff alone, from the big, beautiful bill. Then we've got the changes to the SLR that allows maybe $3 or $4 trillion of credit creation from the banking system. We've got enormous amounts of this stuff lining up. Why? Because they wanted to win the election. You know, the good thing is, for once, we've actually got a macro hedge fund manager running the treasury. So I know how he thinks. He was a long-term global macro investor subscriber. I've known him for 20 years. And he understands the game, which is jam the business cycle going into the elections. So we've got that. We've got the debt to roll. It's kind of stacking up, and it tells you your beloved or our beloved alt season is still to come. Bitcoin dominance, the same thing. It's driven by the same thing. It's much like when the economy's slow, people tend to be in treasuries. When the economy picks up, they go further out the risk curve in different types of credit. It's all the same cycle. So it's a very macro asset. And here's the chart of the ISM versus Bitcoin, and you can see the peaks and troughs correlate well. So are we at a top, which is the thing that people bleat on all day on Twitter, with the top of the cycle? We can't be, because we're not topping in the ISM. In fact, we've not even gone above 50 yet, so we've not had economic expansion. Main Street has been struggling. They need rates to come lower. They need fiscal stimulus, and that's all to come. So probabilistically speaking, the business cycle lies ahead of us, and it should be quite rapid. So when we start looking at forecasting models of the business cycle, here's the interest rate model. That suggests to us that the economy strengthens fast and quite dramatically in the next 6 to 9 months. So that's good for altcoin season. That's good for crypto. That's good for all risk assets. Another way of looking at it is central banks, the number of them who are easing. That leads the business cycle, obviously, because they're cutting interest rates. So that tells us we've got a strong cycle still ahead of us.
And for all we know, we might be getting a nice bit of QE. It might not be the QE that we saw in 2021 or other cycles, okay? And let me tell you, there wasn't really QE in 2017, and there was a mad bull market, okay? But if we're getting some sort of liquidity, some sort of injection, whether it's repo repurchases or whatever it is, let's listen to Arthur Hayes and hear what he's got to say on this.
Technically speaking, an RMP is not quantitative easing if you assume that the banking system is the one that is going to be the primary channel affected by this program, but it's not. The Fed is doing this to entice money market funds to lend more in the repo markets, which directly finance the U.S. Treasury. So it's a way for the Fed to finance the U.S. Treasury at the short end of the Treasury curve directly, using money markets funds and the repo market as the conduit. And so people say, oh, this is just technically helping the market plumbing. But if Scott Bessent issues most of his debt at the short end and the Fed is buying the debt, that's money printing.
And all we really want to see is this go up, okay? As Arthur says, okay, you know, they'll say it's not QE, but it is a form of QE, okay? And it will be increasing the balance sheet, okay? And that's the most important thing. Because as we've seen with times where this was going up, it was good times in the markets, okay? Now, look what happened in 2018, 2019 with this RSI going deep red, okay? we've been doing a bigger one, okay, down here. This whole time has been a long time of tightening, okay? I actually can't see a longer period of tightening going back to, this chart starts in about 2002, okay? It was easing pretty much most of the time with short spells of tightening, okay? Obviously, we had a big expansion, okay, after the pandemic, 2021. So they had to tighten a lot, okay? They've done the tightening. This looks like it's reversing, okay? They slowed down the tightening, okay? Now they've stopped tightening completely as of 1st of December. Now we're hearing that, they're going to be doing these repurchases, okay? And we could start to see this heading up very soon. And we will start to see that because we can see the proof that they are already doing their repurchasing operations of buying T-bills. These operations are in play already. And to tell you a little bit more about these operations, here's Lyn Alden.
This new term, the gradual print, instead of massive stimulus waves, you argue that we're entering a phase where liquidity expands kind of slowly, roughly in line with the nominal GDP. If liquidity expands only gradually, does the cap, does that cap the upside for financial assets? I mean, what are we looking at in 2026? Is it going to be kind of a melt-up narrative investors want to believe, or do you think it's a slow grind?
Well, sentiment can dictate how fast asset prices move, because asset prices, of course, can move quite differently than underlying liquidity conditions. But generally speaking, yeah, that should, the bias is toward kind of a gradual increase. And for context, in 2019, there was a repo spike, and the Fed was kind of shifting. They ended quantitative tightening in response to it. They started shifting to kind of gradual balance sheet increases. They didn't want to call it QE because they weren't doing it for economic stimulus and they weren't buying duration. They were only buying T-bills. And they were doing it primarily just to support bank liquidity. And then, of course, a few months later, when COVID and lockdowns hit, they went into like giga stimulus. But if you factor that out, that's basically that was kind of that liquidity thing that they were addressing. What we see here today is kind of a repeat of 2019, except hopefully without this kind of big lockdown or pandemic or war or whatever in front of us. So if you just have that environment, you're more likely looking at this kind of more gradual scenario. The gradual print. I mean, the term there is so. I was on Natalie Brunell's show and I talked about this kind of gradual expectation we were going to see. Of course, my friend Larry Lepard has a book out called The Big Print. And so we're on somewhat different sides of how much balance sheet expansion we expect next year. If there's a really big stimulus, we can call that the big print. Whereas my base case is more toward a gradual expansion of the balance sheet, which they won't call a stimulus. They won't say it's for economic stimulus. They'll say it's for financial plumbing and technical issues. But really, basically, it's to support ongoing fiscal deficits and bank lending without allowing any sort of contraction to occur.
Maybe it trickles in, but liquidity is coming. That's fair to say. We've got a lot of top analysts here, all agreeing, all on the same path. Some of these people are the smartest people in the business. They see the liquidity is coming. It's impossible to try and time it all perfectly of how this is going to impact the markets or what's going to happen. Interesting point that Lyn said, though, speculation, and enthusiasm can drive the markets, a bit higher than what's expected with the given amount of liquidity. Okay, so just by the being easing conditions and lending to banks and just a better flow of liquidity will have a really good impact on the markets. Okay, now, will we get a rate cut in January? Well, at the moment, Polymarket is saying no. It's saying we're going to get no change, 86% chance, no change, okay? But this can change quite quickly. But like I say, even if we get a pause, it's very unlikely we're going to get a hike, okay? Where is it? 25 basis point increase, 1% chance, okay? Less than a 1% chance. Central banks do not just jump from cutting to hiking just like that, okay? So chances are you'd probably get a pausing environment before hiking. But the way it looks like we're going to get more cuts next year, okay? And we can see that because, here we go, this is the central bank interest rates site, whole world. So all the ones with the green arrows down are cutting rates, okay? So the only ones hiking are Brazil, that was back in summer, so no change since then. And we've had Japan recently, okay, hiking, as everyone was aware because it was all over the news. Other than that, the whole world is in a cutting cycle, okay? So I believe that narrative continues. When you start to see more countries turning to hiking, then you might want to have a closer look at the Fed, okay? But the Fed is usually driving the major narrative across the world, okay, as is the ECB and China, some of the bigger nations, okay? So we are in a cutting cycle, and I think that continues. As I keep telling you, when the ISM starts moving up, that'll be good for risk assets. And as we can see, Bitcoin has been outperforming altcoins since September 2021, okay? Altcoins have been in a downturn. Okay, this is total free against BTC, okay? But this structure here, you know, this is a higher low, okay? And, you know, can it hold this pattern here? A better one to look at as well is the others chart, okay? This is others versus BTC. Again, been in a downturn since January 22, okay? But holding this line here, okay? And is this a double bottom we're starting to see? Or is it, you know, going to be some sort of inverse head and shoulders? You know, it could potentially be a reversal pattern we're seeing. You know, that would be good structure to hold as well. You know, like charts tend to hold good structure, you know, over time, okay? And if it can hold this structure, that would be very beautiful. And looking at the crypto market cap, okay, the total crypto market cap is undervalued, okay? See this red line? That's the value line, okay? It is undervalued. It's never been overvalued for more than, you know, a small period in this cycle so far. It just, even that line, okay, I know this is a longer line than other cycles below, like even longer than 2017, okay? But if you look at it like this, okay, you had this shorter bear market in the just before 2013 cycle, okay? And you had a long one in 2017. You had a shorter one, okay, in 2019 to 2020, okay? And then you've had a longer one again. So short, long, okay? It's literally been, I know you've seen Bitcoin go up and do, you know, however many X's it did from the low, but altcoins have not run. Ethereum's not even broken all-time highs, okay? And I believe, do you think that crypto market's going to get more higher valued over time? I do. And when you look at the total crypto market cap chart, okay, and we look at this cycle so far, it is also still, it's been an uptrend, okay? We might not have seen, you know, you might have seen a higher high here, but, you know, this includes Bitcoin, Ethereum, everything in the crypto market, excluding stablecoins, okay? So it made a new all-time high, but that's not the type of cycle we're used to in crypto. We're used to seeing big expansions. Okay, big expansions. There's not been a big expansion, and the ISM and the business cycle is telling us that, and liquidity, that future liquidity to come is telling us that we will get a big expansion. Okay, it's at the moment riding on this 100-week EMA. Okay, this trend line has not been broken yet. Okay, so you know, and you know, it's still holding support above this high here, this previous high. Okay. So, you know, it still looks pretty good to me. And it looks like stairs are being climbed here, you know, up and down these stairs, and it just could shoot off at some point. Okay, I'm not saying that we can't consolidate around here longer. I'm not saying we can't go a little bit lower. You know, that's very near-term thinking. And I don't like to do too much near-term thinking, okay? We've only got to look at the stablecoin market here, okay? Been growing exponentially this year. Okay, and we saw a bit of a dip from the October when Bitcoin made an all-time high. We saw stablecoin market pulling back a little bit to about mid-November, and then since then, you know, while price has not been doing much, the stablecoin market cap has been increasing, and I believe this will break all-time highs soon. And you know, the stablecoins will keep growing, and then at some point, and it won't be all of them, but a lot of this stablecoin market will be deployed into altcoins. And when we talk about stablecoins, this is a really interesting chart to look at. This is the USDT chart, okay, dominance chart, sorry, okay. And what we see is every time that you hit this sort of resistance around this 6.7 mark, okay, it's done it a few times, okay, each time has called a low, okay, a local low, okay. So, you know, this is the low at the moment, you know, calling it around these highs, and we're not done with these lows, and maybe we're not done with these highs, okay, but this high here was that low there, this high here, that low there, and it goes back, and you can zoom out, you can go and check it out, okay. Now it goes up into different ranges. So when we was in the bear market, stablecoin dominance, the USDT dominance was higher in the chart at a higher percentage, around this 8% chart. At the same time, that was calling all of these local lows, okay. Go back to the bull market of 2021, and then we're going back down to this sort of range, almost where we are now, okay. And each of these highs called lows, and before the big expansions, yeah, for the big expansions, okay. So we are in that sort of position right now, so that's a reason to be bullish, in my opinion, okay. Because don't forget also, this is a downtrend, okay, and it has been unable to break this downtrend. So it looks like it could be having a local top here at the moment. It's been trying to break out for a while, keeps failing, keeps getting pushed down. And looking at the total TVL in crypto, total value locked on all chains, okay, currently at 218 billion, okay. So liquidity is not leaving DeFi, really, okay. I know it might have been up here at 327. This is roughly around a 30% correction, which is very similar to what's going on with Bitcoin at the moment and Ethereum and some of the bigger cap coins. The death cross is here on this chart as well as it is, you know, on Bitcoin, okay. And the death cross also on TVL is called round about the lows, okay. It can dip a little bit lower, of course it can, but you know, it quite often calls lows, okay. There's one, you know, it went lower afterwards. There was one, went a little bit lower afterwards, you know. And so there is a chance we could go a little bit lower on the TVL, and then it might see the reversal. Well, the crypto market goes up, price goes up, DeFi figures go up, okay. It's very much a chain reaction to that. And you can also see all of this on DeFi Llama, okay. Let's go zoom in a little bit, okay. You can see it's higher lows, okay. Might be finding a little reversal here, or it could be this next step before it goes lower. We will have to see. But you know, that's on all chains, okay. Doesn't count for all the TVL on DeFi Llama because it doesn't have every single chain on here. It doesn't have every single platform on here. But we can look at Ethereum. Ethereum's got the higher lows, okay. Look at Solana. Solana's got the higher lows. We look at Binance. You know, it's a bit different on Binance. Base, higher lows, looking very bullish on base. And you can see that on a number of them on here. Sui's a little bit of a lower low now. Yeah, it is. But, you know, when you zoom out, you know, okay, where this thing has come from, okay, this was only like last year, okay. It's going to be more volatile. It's Sui, it's a newer asset. So, you know, when people are going into risk off, you know, they're going to risk off harder, aren't they? But you know what? When they risk on, this will risk on harder as well. And it's been so fearful for so long. Extreme fear still. Okay, we've been extreme fear. Seems like for an eternity now. You know, I miss those greeds we saw, you know, earlier on in the year, or the extreme greed we saw this time last year. Okay, but it's not been a good year for crypto. But, you know, sometimes... you've just got to ride it through and not let psychology overcome you, okay? And a bit about psychology is a nice little chat here from Alex Becker. Despite whatever you think of Alex, okay, I know he can insult a few people, he can make some wild predictions and everything like that, but some of these, he's got a great psychological approach to the markets that I think some people should take on board sometimes. Here he is now.
Usually in crypto, when my emotions get very negative or I get very sour about the market or impatient about the market and not wanting to do crypto anymore, that's almost every single time when I should be buying or when I should be holding or doing absolutely nothing. When I'm really in the crypto, I'm really excited about it, that's usually the time I need to be selling. So when I'm looking at my emotions and how I'm thinking about the market, the more annoyed I am, the more confident I actually am in the market, but it doesn't feel good and it's not fun to talk about. And if you look at all of Twitter and you look at all the comments, people have just been fucking outraged because Bitcoin has gone up for a calendar year. And most of the smaller coins, including ETH, haven't even really done much. And I think that's about to change because this wipeout just reset everything. And so this has driven people to insanity. And you've seen market makers just pulling the levers up and down, dumping and pumping, because every reaction they do, everything they do to the market gets overreacted 3 to 4 times because people just won't fucking wait a couple months to get the gains they need to get. They won't wait for what is obviously coming. I think if you think that Ethereum isn't going well past its all-time high, probably $6,000, $8,000, I think you're a crazy person. Like, that's not even me being unreasonable. I think you're just crazy. And I think if you think that when that happens, we're not going to see the money spill onto alts and everything, I also think you're just crazy. I don't think that's a very hot take on the market. I think it's just basically what's about to happen in the market if you look at all the liquidity in the world and everything going on. And so yesterday, what I think you saw was the culmination of all this frustration combined with the market makers pulling every lever they possibly had to dump the market. Trump announced this, the exchanges locked down. You saw all sorts of funny business on Binance that caused massive, massive liquidations. And so many people just said, fuck this, I'm done. And this is usually when you see the biggest gains happen in crypto. I'm going to get into each of these points point by point, but at the top of markets, when you see a big dump, what you see after it happens is people laughing and giggling around, and then it slowly dumps more and dumps more and dumps more. We'll go over the last bear market start here in a second. You don't see people celebrating on X. You don't see people saying, I told you so, the market's over. You don't see people predicting that alts never run again. You don't see people predicting that the 4-year cycle's over. You don't see 4 months of pessimism and annoyance and frustration in the market signaling around a top. Okay, last top. If you even mentioned that the market could go down, you got chased off X. I'm not kidding. If I went in, you can go read some of my last videos where around the market top, I was saying, hey, like things are getting pretty overheated. Like people found you. They chewed you out. They made videos about you. They ripped you apart. The comment section was pitchforks and fire. That's what a top looks like. This is not what a top looks like. And I'd be extremely blown away if what we just saw was the top because everybody was super pessimistic and more money was sidelined than ever before in history. And so what happened when this pimple of frustration was poked with a lightsaber yesterday, it exploded in a pus-filled bubble, and all this stuff that's been bubbling under the surface has been reset, which is why I'm excited to make this video, which is why I'm like, finally, I can have something to talk about on this fucking channel instead of just like, hey, yeah, the market's really annoying and we just have to be patient. Now is a time when we need to be striking. So let me explain this to you and explain my logic to you because I think it's going to stop you from making a really stupid decision right now, which is selling. This would be the stupidest thing you'd ever done.
Yeah, that was Alex Becker actually talking back in October, actually, when the crash happened around 10th of October. Okay, so some of the comments there is a bit dated, but the psychology that he's got is right. Okay. So many people think that it was the top. Okay, but like I say, everyone was worried about whether it was the top so long. Okay, when you see the top of a market cycle, you know, there's euphoria, there's thrill, and people think it's going to keep going. Okay, and I know you could say, well, aren't you saying it's going to keep going? Yeah, but it's different because it's not in a toppy, euphoric environment where people think that it's going to keep continuing. There was no euphoria. There was no alt season for starters. Okay, look at this. This is the alt season chart. Okay, very similar to Bitcoin dominance, really, in the waves of it. Okay, but look, I mean, this is the best we got. Okay, up here around just above 50. Was it 50? Where is it? 54. Okay, previous cycles it got up to like 94. Okay, you know, it came down from that in 2017, around 100. Okay, and then we had a few tops on alt seasons. We had a few alt seasons in the 21 cycle that made it above this 75 line. Okay, people were looking at this chart and looking at it on this view. Okay, and saying, yeah, look, we had an alt season. We've had alt seasons in, you know, 24, 25. No, look at it on the yearly, you dumb idiot. Okay, because this was no alt season. Okay, we've got that to come. It's going to come. You'd have to, like he said, you'd have to be stupid to think that there was never going to be an alt season with all what we've seen fundamentally going on. Okay, we know what's going on with liquidity as well. We know what's going on with the business cycle. Okay, and nothing's ever a given. Obviously, none of this is financial advice. This is the way I view things. Okay, you're seeing top analysts also viewing it in those ways. Okay, we can see things lining up with technicals, fundamentals, economics, and cyclicals. Okay, and it's all still to play for, as I keep saying. Look, we didn't have any top indicators hit either. None of the top. Here we go. Look, 0 out of 30 of the top bull market indicators ever created called the top. Zero. Okay, and look, 100% confirmation here that he says you should hold and not be selling. Okay, so and you can go and check this out on CoinGlass. Okay, so my aim in this video was to give you all a little bit of reassurance that things are probably okay. Okay, yeah, you can go into your Christmas and have a really nice one with your family and not keep looking at your portfolio, because not much is going to happen on Christmas Eve, Christmas Day, Boxing Day. The US markets are closed. Okay, well, they're open for half a day on Christmas Eve. Okay, today, and we'll have to come back probably in the new year and see how things are doing. But like I say, I think 2026 is going to be an absolute blinder of a year. We've had a really tough year in crypto. 2025, it's supposed to be our year, but it wasn't. Okay, and we've got to live with that, and we've got to crack on and pick back up where we left off in the new year, and just keep grinding, keep studying, keep learning, keep watching the charts, and it'll all play out for you. Okay, I'm going to leave you with something funny. I wish you a Merry Christmas. Okay, and if I don't see you before, a Happy New Year. I might do an annual roundup, actually, a little bit of a highlights of some things that happened this year. So watch out for that next week. Okay, but have a lovely Christmas, and I'll see you soon.
Crashing